Hi everyone, this is Chandeep Kapoor. Welcome to our weekly market analysis video. In this video, we'll look at the charts of Bitcoin and I'll share an update about the trade which I shared 2 days ago, and I'll share the trade which I've taken for the next week. So the chart of Bitcoin, as discussed in the previous video, we saw a 20% up move in Bitcoin, and after that we have been trading sideways for the last 3 days. In the last video which I shared 2 days ago, I shared the trade of selling the 39,000 call option, and this trade was expected to return between 1 to 2% a day, and an update on that position. So the current unrealized PNL on this trade is 4%, and this is likely to expire in profit. Expiry is currently only 1 hour away. So we've made 4% profit in 2 days. That means approximately 2% return a day. Also, for the next week, currently there is nothing much to see in the chart since the last video, and it has been trading sideways ever since. And along with this sideways movement, one interesting thing to note is in the implied volatility chart. So, the daily implied volatility of Bitcoin is currently trading at around 46, and it was around 50 or 60 sometime back. The normal implied volatility of Bitcoin, which you may see without an up move like this, would be around 30. So, since the implied volatility is currently higher than what it used to be, along with a sideways movement, so the best type of trade to take in this scenario will be to take a short strangle or a sell very far OTM calls and put options. So, the short strangle which I have taken is one Bitcoin short put of the 30,000 strike and one Bitcoin short call of the 40,000 strike. So the combined premium in these two options is around $82, $92, and the total margin required for this position. So one Bitcoin costs approximately $340 to sell at 100x leverage. So the total margin required for this position is approximately 680 to $700, and the expected return is around $92. So that makes it approximately 13% for the week. So we are again close to our 1 to 2% per day mark, towards the higher side of 2% a day. The current unrealized PNL in this trade is around $25, which is due to the spread. And this is the trade which we are taking. So this is a very safe kind of trade to take because both these options are approximately 15% OTM right now. The 30,000 strike is roughly here, and the 40,000 strike is here. So both these options are between 5%, 15% to 20% OTM. So this looks like a very safe trade to take. The stop losses for both these options have been placed at 31,000 and 39,000 of the index price. For more trade updates like this, follow the channel.